Hello, everyone. My name is Chad Hart. I'm an extension economist with Iowa State University. And today I'd like to give you a brief overview of what USDA released with their January reports. This gave us our final estimates for the 2024 crops and also gave us sort of a preview of what we might expect in terms of crop usage as we go forward here within 2025. Now, in terms of what we saw from USDA, the idea is that, like I say, here within January is when they tend to do their big outlook as far as that, what we grew this past fall. And when they looked at these past crops, what they found was that that late season sort of drought that we, built up, especially in July, August, and September of this year, did do some damage to the crops. Now, that said, we still produced some very large crops, but the idea is they weren't quite as big as once anticipated here. And so that did give the market some breathing room to go higher once these reports were released. Now, here you're seeing the not only the updates for the 2024 numbers, but we've also got the preview for 2025 out there. Now, the big adjustments here were when you're looking at corn on the acreage, they did take planted area down 200,000 acres, but they adjusted harvested acre up by roughly the same amount. So we did harvest more intensively than first anticipated. But when you look at that yield, that was the big adjustment there. They knocked that down 3.8 bushels from the November estimate. So that ended up taking out 276 million bushels from production, dropping us from above 15 billion bushels to below 15 billion bushels. And so that gave the corn market some room, if you will, to move things around here a bit. And so with production down below 15 billion bushels, USDA then adjusted usage down as well, and they adjusted it in two places. They ended up taking 50 million bushels out of feed demand, and then they took 25 million bushels out of exports. Now that's after raising exports 150 million bushels in December. So you can see here there's this trade-off between smaller crop, meaning smaller exports, but at the same time too, the export pace has been fairly strong so far this year. But when you add up all those usage categories, it's still showing we're using over 15 billion bushels, and that's helping bring down ending stocks. In fact, that was the big shift here when you're looking overall, is that ending stocks have now dropped down to 1.54 billion bushels as we look towards the end of the 2024 marketing year. And if you think back to early in 2024, there were concerns that we could see ending stocks above 2 billion bushels. So having it down around 1.5 billion, again, gives the market some breathing room here. And with that, USDA raised their season average price estimate by 15 cents to $4.25 a bushel. Now, given that positive momentum, that sort of helps with what USDA projected for 2025, seeing more corn, more area being planted in the corn, rising up to 92 million bushels there. But we're going to need to see demand growth as well. If we do get that extra acreage, that means more production, which means the need for more usage. Now, when we're looking at soybeans, similar tale, but the idea is in this case, while production went down, it was not quite as much, and we didn't necessarily see as much momentum when it came to the markets as well. So, in terms of the 2024 numbers, there was no adjustment on planted area. There was a small adjustment on harvested area, but again, the big move was on the yield side. They ended up taking a bushel out of the 2024 crop, so knocking it down to 50.7 bushels per acre. Still a good sized crop, but now well off the record pace we saw in 2021. And so when you're looking at overall production, it's around 4.366 billion bushels. That's down 95 million from the previous estimate. So just like with corn, we're seeing shrinking supplies here. The challenge here is that they didn't move demand at all, so we still see usage holding in there, and in this case, production for 2024 still exceeds total usage. And so while ending stocks got smaller, they're still bigger than what they were in 2023. Those ending stock levels dropped by 90 million bushels down to a total of 380 million bushels, but that's still 38 million bushels above where we ended the 2023 marketing year. And since those ending stocks are still higher, USDA held its season average price at $10.20 a bushel, so they didn't make a move there. Given the, let's call it, less optimistic outlook we're seeing in the markets for soybeans, USDA is again expecting 2025 to see fewer soybean plantings, but the potential of a bigger crop, especially if trendline yields come in. So it's the same sort of issue, needing usage to grow to match the possibility of higher production in 2025. Now, as far as those estimated yields, what they basically ended up showing was that, yes, it was still a record yield for corn, but those records shrunk quite a bit. So you can see here, we did still see state records. Iowa hitting a record at 211, Illinois at 217, but they took out a few as well. Nebraska had been projected for a record yield, so had Indiana and Wisconsin. Those came off the table. In fact, the biggest cut we saw was in Indiana, where they knocked their average yield down 11 bushels from previous estimates. We also saw some 9 bushel drops in Kansas and Minnesota. And so when you added that all up, it meant that when we were looking nationally, we were down nearly 4 bushels from previous estimates. So when we're looking here, again, a great big crop, but not as big as we had first feared. When you're looking at soybeans, similar sorts of adjustments here. In fact, most of the area within the Midwest and Great Plains saw anywhere from a half a bushel to 3 bushel cuts on the soybean side. About the only state that added as we went between November and January was the state of Missouri, which went up 1. But overall, still very good crops, just not quite as bin busting as we had been concerned about. Now, as we look at the world supply situation, there wasn't a lot of adjustment there either. We did see the world total being knocked down, but that was mainly because of the shrinkage in the U.S. crop. Actually, when we look at foreign corn growth, it actually went up a little bit, with the vast majority of that increase happening in China. We didn't see any adjustments when it came to the South American crops in Argentina and Brazil. When we're looking at soybeans, again, most of the cut here is coming from the U.S., but we did see a small cut in other parts of the world. Again, probably the biggest one happening in China here. So all in all, what we did see was production, for the most part, tightening up and helping support a little bit higher prices here following these reports. When you're looking at the livestock side of the equation, as far as feed demand is concerned, there wasn't a lot of movement there either. We did see them increase the possibilities for a little bit more beef and pork production in 2025, but that's being offset by a little bit of a reduction on the broiler side. So overall, not a lot of movement when it comes to meat. There wasn't any movement on the biofuel side. And like I say, on the export side, they did cut it a bit for corn, but that's after raising it a lot the month before. So ahead, we're still net ahead when it comes to corn exports. So as we look at where prices settled out after the report, we did see a nice little bump for both corn and soybeans. For the 2024 crops, that bump is helping reduce the losses we're seeing build up right now. We're still below production costs, but corn's weighing in at around the 440 range right now, where soybeans is coming in just shy of that $10 mark. Looking forward into 2025, what we see now, though, is that with 2025, cost estimates for corn are down. In this case, for Iowa, we're looking at 435 a bushel there, and prices are in that range right now. So you could argue corn's floating around break even right now. Soybeans, though, still has a hole to fill in here, with prices again around $10 as we look at the 2025 crop, but costs are still north of 11. And so 2025 is still going to be a challenging year, but as I say, with corn around break even and soybeans a little bit below, it makes sense that we would see some shifting to more corn plantings as we move through this spring. So that's sort of the outlook as USDA is looking at what we're seeing out there for the crop markets. It did come as a kind of a, let's call it a surprise, to see how big the cuts were on production for both corn and soybeans. And like I say, that's why we saw double-digit increases for both corn and soybeans coming right out after the report. Hoping that we can continue to build on those as we look forward here, because as we we just showed at the very last end there, the economics right now are still very tight when it comes to crop production here within the U.S. Well, with that, as a brief update, again, my name is Chad Hart, Extension Economist with Iowa State University. Thank you for the pleasure of your time.